unless the world is changing to the point where all wisdoms disappear, I still follow his statement, be greedy when others are fearful, and be fearful when others are greedy. Hi folks, this is Big Mike Zlotnik, and today's discussion is going to be on a very interesting topic. The topic is, let's compare investing in deep value commercial real estate versus hot, high-flying Bitcoin Magnificent Seven stock market. Why this conversation is important? Well, because in the last few days, I've had discussions with real estate fund managers, with Bitcoin people who have enormous amount of wealth in Bitcoin, with investors in high-tech world that have done remarkably well. And we find ourselves in this very interesting time. So stock market, especially Magnificent Seven, are doing phenomenally well. Bitcoin is doing really, really well. We're dealing with the regulatory environment a lot friendlier to Bitcoin and crypto in general. We're dealing with the pro-business administration. Big, beautiful bill just passed. So let's compare and contrast, just so that folks understand options, understand the opportunities, understand risks. The risk perception is very low right now. Everybody is very complacent, feeling great about the investments of the past in stock market, Bitcoin. And this is, to a degree, I go back and I think a little bit about what Warren Buffett said. Yes, he's an old guy, but he is the Oracle of Omaha. He's old and wise, and unless the world is changing to the point where all wisdoms disappear, I still follow his statement, be greedy when others are fearful, and be fearful when others are greedy. And I'm not going to take any position here. I'm just going to lay out the facts for you, for the audience, to give you opportunity to think about it, right? So let's talk about pros and cons first of Magnificent Seven, and we'll also cover Bitcoin. We have advantage, deep value deals. So we'll cover these components, but let's just compare and contrast. Pros and cons of investing today in Magnificent Seven, maybe stock market in general, and Bitcoin. First of all, momentum. There has been fast growth and momentum is strong, and it feels like the bulls are running, right? And potential is high. Potential of AI is tremendous, transformational. Folks are talking on various podcasts, writing about the multi-trillion-dollar opportunities in AI. No argument. The potential is tremendous. But on the con side, risk is also high. And what's misunderstood is these investments, or maybe it's not misunderstood, maybe it's accepted, the investments that are being made, the bets that are being placed on AI technologies are of unprecedented size. Companies of a Magnificent Seven size betting their farm, their future on some of these investments. And the field is very competitive, and it's a race. It's a race to superintelligence. It's a race to be the first and the most accepted leader in the space. We've seen this before. We've seen the booms of .com, the internet. This is perceived to be a revolution. This is certainly most transformational. But the bets that are being made are gigantic. And there will be winners and there will be losers. Probably few winners and let's call them many losers. This is what usually happens in technology, in these high-flying risk-reward type of situations. Now, another advantage of investing in these stocks and in crypto is generally high liquidity. These things trade on public markets, exchanges, and liquidity is high. So that's in comparison to real estate. We'll cover real estate investing in just a second. In general, the higher the price, the higher the risk. It's one of the cons that, relatively speaking, relative to the intrinsic value, a lot of these investments may appear to be expensive. It's difficult to say. If the potential is very high, you could make the argument that it's really not expensive. Maybe the expected value is very high. So let's talk about how most of these bets are perceived today. So let's take an example of somebody writing 10 $1 million investments in these strategies. And $1 million investment is nothing in that space. Maybe it should be 1 billion or $10 billion checks, right? But I'm just going to use for sake of the math, 10 $1 million investments. And the risk profile is very high, and the expectation maybe on these investments is that 1 out of 10 will go 10 to 100x. Who knows, right? I don't even know what the upper limit. It's some kind of very high limit, but it's multi-x investment, and 9 may fall behind. Some of them may be completely zeros. So it's catch 1 out of 10, maybe write 10 checks so you have better chances of catching that 1. See the other 9, probably some may fail, some may do okay, some may maybe somewhere in the middle.